Hello, everybody, and welcome to this week's Gold and Silver Club, presenting the Commodities Corner, presented by myself, Phil Carr, and Nik Kalsi at the Gold and Silver Club. Today, we will be doing a review of the commodity markets this week. We'll be looking at top trades of the week on gold, silver, and oil. We'll be doing a live technical analysis and trading. We'll be identifying highly profitable trade setups. We'll be looking at the week ahead, so key events looking forward to. Now, the markets are very active this morning. We've been with our traders entering several trades just this morning. There's a lot going on right now across oil and across gold as well that I want to get you to on my screens fairly quickly. So we'll move across to live analysis very shortly. First of all, just to give you a heads up on the week so far. So gold price dropped as the FOMC statement lifted the US dollar index. So US dollar index looking very strong today, putting a lot of pressure on the commodities markets, which we'll take a look at shortly, presenting some very nice short opportunities just today. Gold price ended the US trading session solidly lower yesterday after the Federal Reserve decided to keep its stimulus program intact and offered few surprises. So institutional traders bought the US dollar aggressively after the Federal Reserve monetary policy was announced on Wednesday. The FOMC committee decided not to alter the central bank's $85 billion per month asset purchasing policy, which traders perceived as hawkish. So the FOMC statement said the US economy has made some big improvements in recent months, and this hawkish tone from the Federal Reserve led to fresh speculation that tapering of the Fed's monthly bond buying program could come sooner than expected. So possibly sooner, as soon as December's FOMC meeting. So this suggestion alone was significant enough to cause the US dollar index to rally and precious metals to sell off. So last month, the Federal Reserve surprised the financial markets by opting not to scale back its bond buying program. And with that, gold surged more than 4.8% after the FOMC committee released its previous policy statement on September the 18th. The FOMC committee has explicit targets it wants to see met before it begins tapering, which is 6.5% unemployment rate. The official unemployment rate currently stands at 7.2% from 7.3% in the previous month. And as we move back into next week, traders are now focusing on the much anticipated US non-farm payrolls, which is due on Friday, the 8th of November. So that's next Friday, on which the FOMC could get more clues there with regard to tapering for December. So that's going to be a very key announcement for us as well moving into next week. So looking ahead, the week ahead, the important question will be, will gold and silver prices continue to fall next week? Okay, so I'm Phil Carr, professional trader and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative markets in the world: gold, silver, oil, natural gas, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me at the Gold and Silver Club is Nik Kalsi, professional trader, investment analyst, and speaker. Now, Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nik spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset, and tools that give any individual the definitive edge to trade in any economy. Also writes for a number of global business and financial publications, and we've appeared frequently on financial television. That's just a bit about the Gold and Silver Club. So looking at gold right now, let's look at the current price, $1,313 an ounce, looking weak, looking like it wants to come down to the next important Fibonacci levels below, which we'll discuss. Oil looking weak right now too. Okay, so just in terms of gold seasonality, so we have played out very well over October. I mean, those of you who've been on it's good to see lots of familiar faces here. Lots of you have been on our previous commodity corners from the beginning, really, of October. You will know that seasonality-wise, October tends to be a bearish month. for oil until you get into, for gold until you get into the last week of October, where we have actually seen a bit of a rally going into the end of October. Now you can see where we are right now. From the beginning of November, in terms of seasonality, that does typically mark a bottom for gold over from the month of October. So this is very interesting because next week we are going to have Diwali, which is we've got Indian festival season where a lot of gold is purchased. So that's moving into next week. So I would be careful here. There are nice shorting opportunities we've got at the moment, but day trading opportunities, I would still be careful about holding certain positions for longer term. So a lot of the trades opportunities we have now are good day trade opportunities, but be careful. Next week we could start to see some. The first 2 weeks of November tends to be bullish for gold. So I'll be watching out for that, whether we're going to get a breakout of this downtrend, which we usually see in November. The first couple of weeks could be bullish, and then you can see moving into mid-November after these festivals start to culminate and finish, we could get a bit of a dip again before we get the Santa rally moving into December. But first 2 weeks of November, bear in mind, normally those are bullish for gold. So we'll see how far gold can get down today before we start seeing some support. Okay, so US dollar index, very important today. I'm going to show you my US dollar index chart. It's looking really strong at the moment, 80.52 right now. It's had a big rally since, it's coming into resistance now though, but it's had a big rally since the FOMC announcement and held 79, a very important level. So we'll look at that shortly. And looking at the top trades of the week, we've had some, again, more lucrative trades on the oil, on gold, on the commodity currencies. So first trade that we had was this was after the weekend. We spotted on Friday's close a nice hammer at support on Brent, and that actually on Monday, that triggered once we had that, the Friday high was breached, and we had a nice opportunity to enter at 107.42, had a nice surge upwards on Monday. That was a rise trade for the price to be higher, and that moved very nicely indeed. Then we've had Australian US dollar. We had a nice setup here from, you can see, a nice level of support to break there at 0.9567. We had an inside candle set up here just on Friday evening, on the close on Friday. Then this opened on Sunday, gave us a nice opportunity once we broke through the low on Monday at 0.9567. Just a full trade for the price to be lower, and you can see we moved significantly lower on Australian US dollar too. WTI oil, again, we had a nice setup on Sunday close as well, moving into early this week on Monday. We had some failed attempts to break above 98.50, found resistance at also the 50-day moving average, and that provided a nice sell opportunity this week too. This was on Monday as well for full trade for the price to be lower, selling at 90. Actually, Monday we had this set up. Tuesday we broke down, so 97.64. And you can see we came down a lot lower WTI for a profitable trade. And just yesterday as well, after the FOMC, we continued to break through key Fibonacci levels, which I'll talk you through. We broke through 1336 level, got triggered at 1333, was where we took the instant trade, and we've just come lower. In fact, we've broken through 1321 overnight, and we're down at 1312 now. It's going to go lower. It looks like it's going to come down to the next Fibonacci levels below. But you be careful because we could get a whipsaw, we could get some buying later on into the afternoon. So we'll watch out for that as well. So just be in and out quickly at the moment on some of these trades. Or certainly, move, be intelligent with your trades here, and just bank your profits too. You can have shorter term trades as well as long term trades on binary.com. Okay, so without further ado, I think we're going to move across to the live markets. There's lots going on. So if you select rises, you win the payout. We're looking at the rise and fall trade types on binary.com. If you select rises, you win the payout if the market exit price is strictly higher than the entry price. And if you select falls, you win the payout if the market exit price is strictly lower than the entry price. Okay, so we're going to look at rise, fall types of trades. And we're going to go into some live technical analysis right now. Okay, so I'm going to share my screens. Okay, good. So first of all, I just want to, we're going to look at Brent. Start off with Brent here. And we're going to just have a look at the setups here. So Brent has actually, I've got Brent and WTI to the left. I've got, this is Brent here. We just actually broke through a major level which a lot of our traders have just joined us in shorting at 108.43. That's moved down about 90 pips in about 20 minutes. It's been an impressive move, actually. And at the moment, on WTI, WTI is going to be the main focus now, because we've just broken through a very key level of support today, which was 95.94. We look like we're coming lower to the 94.88 level. Based on the weekly, you can see how much of an inverse candle that is. You've got a huge inverse here. Actually, I'm going to move over on the futures contract. I need to get onto the historic charts so you can see what's going on in more detail. Okay, let's go to the historic. Okay, so if you look at the weekly, we've got a large inverse hammer here. We've got a lot of weakness. There's not really much support at all here. Let me just get rid of some horizontal lines. There's not much support here at all until we come down to the next level below 94. It's going to come down to about 95 now. You can see even 95 is questionable how much support we're going to get there, but really nice bearish candle. We've just broken through last week's low just at the moment, so we do think we're coming lower, certainly to about the 95 level at the moment. You can see that on the D1 as well, where we've broken through, and we're just going to continue lower. We expect us to come down, hit 95. If we break through 95 well, not much support until 92, so we can really be on for some good gains here. So let's move across. Let's take an oil trade. Okay, so we're going to go to commodities. I want to show you the difference here. So you've got Brent, basically oil here. This is where's Brent? Okay, I'm going to go for anyway. I was going to go for the sectors because I want WTI to trade WTI versus Brent. So let's go over here to start trading. Then go to sectors, and I'm going to pick the energy sectors, and I'm going to go for crude index. Get a better payout, 81% payout. And I'm just going to go for a trade to be lower by the end of today now. So hours, let's just do a test how many hours we need to have this contract for, because it's going to close. I think it's closing in 4 hours. Okay, might have to go under that because we're in different time zones now. 12:50, 3 hours. See, 3 hours, that's fine. It's the momentum is clearly on its way down at the moment. So I'm going to go for 3 hours, the trade to be lower, crude index here, energy sector. So I've just gone to start trading, sectors, energy sector, crude index, start time 12:50 is going to start in 5 minutes, and duration 3 hours just to be lower. And that is a 81% payout. Okay, I've got to go forward one more contract by 5 minutes, which is not a problem. It's still before the US Open. So 3 hours. So I'm going to go for that trade before anything changes. So 81% payout, 1,379 for 2,500 payout there. Good. That's been executed. Okay. Right. So I just wanted to get that out of the way because it's looking too good to short oil at the moment. So next market we're going to have a look at is natural gas. We're actually in natural gas here from this level up here. Had a nice inside candle set up here at 3.61. So we're coming down really nicely. We just got past this low actually from last week, which was important. We're heading now. Really, I would expect us to hit the next Fibonacci level here, 3.499. So we're going to take this as well on natural gas. Again, I'm going to go for sectors. I'm going to go down to, where's natural gas? Energies again. I'm going to go for natural gas index, get best price. 3 hours is fine. I'm going to see if I can get out any further. No, 3 hours will do me. It's on its way down. Okay. So we can see here, I'm looking for it to come down and hit 3.499. We could do that easily over the next 3 hours, or certainly I only need to finish 1 pip lower than the current price. Okay, so I'm going to go for that, 91% return. Deposit at 1,307 for 2,500 payout. So I'm going to purchase that. Okay, that's done. Good. Okay, so, and also gold, we're in gold already, but it looks like it's going to come down, not find any support really to 1306 here. Got a breakdown of 1321, which was an important good level. You can just really, once gold starts breaking down like this, it's just a case of each Fibonacci level that gets broken, it doesn't find support until the next one. Let's just see if there are any more levels that we need to be aware of here. Nope. There's nothing to stop it from getting to 1307. Let's just have a look if there's any support. There is a little bit of support at 1311 from a previous support. The US market is going to open in about 15 minutes. And usually, when the US market opens, if there's been more falls during the morning, that follows through into the afternoon until the UK closes again after 4:30. So we could potentially just expect more downside. You are getting a little bit of bounce here, 1311. I suspect some might be short already. Gold at the moment. One thing to note with gold, which really is important, and it goes back to our seasonality as well. This is what we need to break out of in terms of for the bulls to get really interested here. I've just got a fairly blank chart here, and what I've done is the highs that we put in on the FOMC. I've just drawn my trend line. I've just taken that high, and I've gone from the high from August, and then you'll notice there's this big, great resistance channel on gold, which it really needs to break through for the bulls to get interested. So I would be really not interested to get long here for any longer term swing trades until we break through this downward trend channel. It's been in force for a long time now, going back to 2012. So that's important. Previous to that, we did have another downtrend here, which we were taking note of, which we broke out of. Okay, so that was a downtrend, but you can see we broke out of that. We had a really nice surge after we got through the 1300s in October. However, that was only in mid-October. This has been the overall downtrend. However, we can see here that on the longer-term time frame, we do have this downtrend intact too. So the trend is your friend until the bend at the end. So we want to wait really for a breakout here before you start considering any long-term buys on gold. At the moment, momentum is down. We could realistically, if we start to form a channel here, right? So if we start to form a equidistant channel with the resistance, we could be due a much larger correction. But we've got seasonality, Diwali. Will that change things next week? Will gold purchasing increase in India? Their exchanges are open tomorrow, so be careful again about keeping short positions open with these festivals next week. So just looking at the day trade really for the time being on gold. Gold, it might be just getting in at the position now. I do think it's coming lower to 1306. It's a little bit overextended to start getting in now because we're already about 100 pips lower. We're already taking the break of 1321. So monitor gold today. I do think we're heading lower, but I do think it could be a bit choppy now going into the afternoon session. 1306 is the next level down there, but I think we could be a little bit overextended at the moment. We'll see. We've got two trades, good trades there. WTI, look, WTI is still going lower right now, so it's looking really good. Natural gas looking really good. So the gold short, we'll come back to gold. I tell you what, we'll come back to that in a few minutes. I want to see what the other markets are looking like. Silver has actually come down. We had a nice sell short on silver from a break of 22.25 here, and we've come down significantly over, well, yesterday we came down very fast, about 40 pips in about 10 minutes, well, about 15, 20 minutes. We had that breakdown in price, and then we've just come shy of 21.64 Fibonacci level, where I would expect it to actually gravitate towards. So we might do that in the US session. Again, it's a little bit late to get into this trade at the moment. It's already moved, but we'll come back to that in a second when I do a summary of the markets. I want to have a look. Australian US dollar. Australian US dollar, we've had some really nice short trades over this week. Particularly, actually, this is time to show you the US dollar index. Here we go. So the US dollar index at the moment. So let me put this on the daily, and we need to just change the period. So I reckon we can change periods. Here we go. Okay, so here's a period. So on US dollar index here, what you will note, this is the big surge that we got from FOMC. Okay, so we found support at 79. If we'd broken that, that would have been really bullish for gold, for Australian US dollar, New Zealand US dollar, silver, but we didn't. It's a really important level of support for the US dollar index, 79 level. Some of you might trade the US dollar index. Actually, I'll tell you what, we should have a look. That would be a great market to have on binary.com. I'm going to do a quick check here, see if we've got. Just going to see if we've got the access on the sectors here to, let's have a look. I'll come back to that actually. I don't want to waste too much time looking at that. But US dollar index is a great market to trade because of the way it moves inversely to gold and silver. So we've had a huge surge over the last few days, but we are coming into a resistance zone here. So again, this is where you want to be careful if you start taking too many positions short at the moment, moving into next week, because we've come up to a resistance zone here, about 80.50. We've had such a nice surge up, created weakness on gold and silver. But if this finds resistance here and it falls back and starts coming back down, retraces back to 79 again, that's going to be supportive for gold, supportive for silver. So that is going to be quite an important level here that we've got on the US dollar index. So I would monitor the US dollar index as much as possible if you can get access to the chart here, US dollar index, and also if we do get a retracement and come down, the really important levels on US dollar index, which are holding our 79 here. If we get a breakout above, let's say we get a breakout above really 80 here, we start breaking above these previous resistance levels, that's going to put a lot of pressure on gold and silver. If we start coming back up to 81, and even start surging up to 82, that's going to put a lot of pressure on the metals. You really want to be careful. You want to be shorted, basically, gold and silver, if that happens. Okay, so US dollar index, key to your commodity trading. Okay, so with that said, Australian US dollar just consolidating at the moment. We've had some nice short positions from earlier on in the week. I would just really wait. If I'm going to short, I'd wait for it to break 0.94 here at the moment, just getting a bit of consolidation. I don't really like it too much for a long at the moment. We're starting to see moving averages cross over here, which is looking like we could be due more downside, but there's not too much going on with this market today. Obviously, yesterday got an inverse hammer on the daily as well. It's not looking too bullish now, although we've got further, we might just be in a pullback here before we get higher prices. It's going to be dependent on what the US dollar index does next. Okay, New Zealand US dollar, similar situation. On the FOMC announcement, US dollar caused the New Zealand US dollar to come down, surge down, or it spiked down to just bounce off key Fibonacci level and the 200-day moving average. We can see where we found support here, 0.818. We did have a dragonfly doji just a couple of days ago. We're getting a bit of consolidation here at the moment. Are we going to see higher prices? We need to break. Really, we need to have a confirmation of break above 0.82959 for buyers to get involved and a pullback here on New Zealand US dollar. But we are starting to cross over here some key moving averages. So it's looking, we've got support here by important moving averages, and also above we've got short-term bearishness. So it's still to be decided, really. We're just consolidating at the moment on New Zealand US dollar. It's going to be dependent on, on New Zealand US dollar. It's going to be dependent on what the US dollar index does next. And finally, USD CAD. Let's have a look at this, because USD Canadian dollar, take a look at the weekly time frames for USD Canadian dollar. Massive inverse hammer on the weekly. So we've got a key Fibonacci level just supporting that. So if we get a breakdown of that Fibonacci here, which is going to be about below 1.040, we could be due in for a nice sell short opportunity. It's not there yet, but it's getting close. So I'd be definitely looking out for that on USD CAD for a break of that key level. Okay, so that's what we're looking at. Okay, so I'm going to do a quick summary now of the main sort of setups that we see. And wow, Brent really, WTI and Brent really moving nicely now. Look at Brent. Let me just move over to Brent. Brent's just breaking through actually some more. Brent's looking very bearish today. Looks like it wants to go lower too. Also, actually, so I didn't cover Brent as much as WTI. Brent was mainly because we've had some nice positions up from here. Yesterday's setups, and we've also broken through a key fib level this morning, 108.43. Just come down to 107.33 at the moment. Brent, it's looking bearish as well, to be honest. It does look bearish. If WTI just has a continuation out to the downside, I would expect Brent to do the same. If you want to trade Brent, we are starting to get a little bit overextended here. I believe WTI has a lot more to go because it's only just broken a major fib level, whereas Brent's already given us over 100 pips today and a nice just trade lower as well. So we're just going to go, if you want to trade Brent, go to commodities. Just go to oil. This is the Brent. This is the Brent oil. It's not WTI. It's the British oil Brent. So 107. So WTI is West Texas Intermediate. It's the American oil. Brent is the UK oil or the European oil. So 107.42 is a price here. Yeah, so that's how you trade it. You can just do price to be lower, sort of trade 91% payout. It's pretty good. Similar way to we took WTI. I'm not going to take that because we've already gone in WTI, but Brent very tradable too. So WTI, to wrap up, WTI we're short, Brent looks short. Natural gas, bring natural gas back. Natural gas, yep, on its way down to the test 3.499. So looks good for a short. Gold, do like gold for a short, but be mindful of everything regarding seasonality moving into next week with Diwali and the Indian festival and so on. Might limit the downside here, so be careful. Silver coming to an area of support here at the moment, so monitor that. Not really a trade on there right now. Australian US dollar needs to be decided, direction to be decided. New Zealand US dollar, direction to be decided. USD CAD looking for a breakdown of a key level here. Okay, so those are the key markets to be looking at. As always, there's plenty going on a Friday, so definitely, take advantage of some of these nice moves that we're seeing this morning. And with that, let's come back to major news, which we're going to see today and moving into next week. Okay. Of course, it's good to see a lot of you onto today's webinar. Lots of new faces as well. So if you do want to take advantage, you can get just $20 trading credit to, which is, it's free money essentially for you to start off your trading with. So do take advantage of that. If you've not had that previously, it's just bonus code 11121F20. You go to binary.com, select sign up, open real money account, and just enter that bonus code. You get £20 or $20, depending on your deposit currency, to start off your binary.com trading with. Okay, so moving into next week, what have we got actually today and next week? Key news announcements. So today at 2 p.m. GMT, 10 a.m. Eastern Time, we have the US ISM Manufacturing Index. That index rates the relative level of business conditions, including employment, production, new orders, supply deliveries, and inventories. So on that index, a level above 50 indicates industry expansion, below indicates contraction. So a higher than expected reading should be taken as bullish for the US dollar, a lower than expected reading should be taken as bearish. So that will have impact 2 o'clock GMT. So in 1 hour's time, that's going to have impact on the US dollar, will impact your gold and silver trades if you have any trades as well. So that's going to be in 1 hour's time. Okay, and moving on to next week. So on Wednesday, the 6th of November, of course, for all of you trading WTI or Brent oil, this is important next Wednesday at 2:30 p.m. GMT or 10:30 a.m. Eastern Time. That data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish, which is often the case. If you do trade WTI and Brent, you will see that correlation play out. Next Thursday at 1:30 p.m. GMT, 9:30 Eastern Time, we have the US GDP. That measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. So that is a broader measure of the economic activity and the primary indicator of the economy's health. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And finally, additional news for all of you trading natural gas. It's a great market to trade. So I would definitely, if you're not trading natural gas, it's worth getting onto. It's a very predictable market. Next Thursday, 7th of November at 2:30 p.m. GMT, 10:30 a.m. Eastern Time, the Energy Information Administration, they will provide natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So while the US indicator, whilst it is a US indicator, it does have a greater impact on CAD due to Canada's sizable energy sector. Of course, that's important because the CAD is correlated to oil price. And next Friday, the big one, US non-farm payroll. So make sure you catch us next Friday at the same time. We're going to be doing a pre-non-farm payroll special. We cover what to expect, what markets to look at, what is setting up, what could happen with A scenario or B scenario. So make sure you're back here at the same time next week. We'll do a pre-non-farm payroll special, okay? That measures the change in the number of people employed during the previous month, excluding the farming industry. So job creation is the foremost indicator of consumer spending and economic activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. So it's going to have a lot of impact. US dollar index. You want to also be able to see the US dollar index if you can as well. Get access to that chart. It's important because that is inversely correlated with gold, silver, and a lot of commodities. And finally, next Friday, an hour and a half after the non-farm payroll announcement, you have U.S. Michigan consumer sentiment. Now, it's at 2:55 p.m. GMT, 10:55 Eastern Time, and that index rates the relative level of current and future economic conditions. So 2 versions of that data released 2 weeks apart. So the preliminary data tends to have a greater impact, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Okay, so obviously you can get these on various news channels too. If you want to very quickly jot those down, these are the key news announcements. So which are important for commodity trading. Okay, so for your commodities. So these are the key news announcements you need to be aware of. Okay. And of course, for those of you who want to take your trading to the next level, you can find out more about the Gold and Silver Club Trader Masterclass, the 1-day and 2-day workshops that we provide. You can also find out more about our live trading room program and also how to join our exclusive Gold and Silver Club live trading room community and our forum. Okay, so you can find out more about that here on the screen here. We are an international community. We have traders from all over the world. So you can get in touch with us on the numbers on the screen here to request more information on the Gold and Silver Club live trading room and coaching programs. You can very simply go to www.jointhegoldensilverclub.com. Just go onto that link and you can find out further information there, or feel free to contact our London, our New York or Johannesburg offices. So London office 0207 193 0403, our New York office at +1 646 808 0403, and our Johannesburg office from +27 11 083 8403. And we do have traders from all over the world. So do get in touch with us on those numbers or email office@thegoldsilverclub.com. Okay, and also, of course, make sure you take advantage of our newsletter. You get free weekly gold, silver, oil, commodity currency news, live market analysis, and prices on the weekly newsletter. So, guys, we will be back here same time next week at 12:30 doing a 12:30 GMT. That is, we'll be doing a pre-non-farm payroll special on that as well. And of course, good luck with all of your trading for today and moving into next week. Thanks to Binary.com and Charisse and the team. And we definitely look forward to see you back here same time next week. And any questions, get in touch with the details on the screen. Okay, guys, so have a great weekend and we'll see you on the next one. Okay, take care. Bye-bye.